Get ready for the action because we are diving straight into the latest tech chaos. We start with Microsoft and the ongoing issue of spoofing the Google homepage on Bing inside Edge. For over a year and a half, Microsoft has been paying $1 million to keep this deceptive user interface trick active, despite massive backlash from Google executives and furious user frustration. We'll break down exactly how this continuous deception is impacting users and what it means for the future of search.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the massive fallout surrounding Microsoft's strategy. We're talking about the ongoing deception where Microsoft is still faking the Google homepage on Bing, even while simultaneously running a massive $2 million sweepstakes campaign, offering a $1 million cash prize. This is a scattershot approach to user acquisition that is pushing the boundaries of what's acceptable in the tech world. Now, let's switch gears to the market. We're getting a final verdict on Microsoft's latest investor update. Our analysis from the Motley Fool will give you the overall takeaway on MSFT's recent performance and what the stock analysis suggests for investors moving forward. And finally, we're closing with some huge news from the AI front. OpenAI and Microsoft have just agreed to cap total revenue-sharing payments at a massive $38 billion. This deal significantly clarifies the financial landscape for both companies and opens up huge potential for Microsoft investors, especially concerning a potential OpenAI IPO. Don't miss out on the full breakdown. Stay tuned for more updates. Microsoft is continuing to display the Google homepage within the Bing search engine on the Edge browser, a practice that has persisted for over a year and a half since an initial public backlash. The company is reportedly paying $1 million for this feature, a decision that has reportedly led to growing user frustration with Google search. While this issue primarily relates to consumer-facing search user experience and marketing, it remains a notable industry story. For practitioners in artificial intelligence and data science, this development has limited direct relevance. In a related context, a resource is available offering a 5-minute Monday brief focused on AI and data science, emphasizing curated, no-fluff content, privacy, and real-world practice, including interview problems based on actual data, featuring over 1,500 SQL and Python problems across 15 industry datasets. Microsoft is maintaining a controversial tactic of spoofing the Google homepage on Bing, persisting nearly a year and a half after facing significant backlash from Google executives and user criticism. As of May 2026, this deceptive user interface trick remains fully operational. When users type Google into the address bar of Microsoft Edge, which defaults to Bing, they are not redirected to the official Google homepage, but instead are presented with a search results page designed to look strikingly similar to Google. This manipulation is further evident when signed-in users may encounter a secondary search bar below the initial query. Screenshots captured in incognito mode confirm that the spoofing occurs when a user is not signed in. The deceptive page features a minimalist layout, a central search bar, and an illustration intentionally mimicking Google's design, effectively trapping users within the Microsoft ecosystem by routing queries through Bing. Microsoft attempts to mitigate this deception by including messaging promoting a free donation to nonprofits, ironically juxtaposed with a massive $2 million sweepstakes campaign offering a $1 million prize to encourage Bing usage. Analysts view this dual strategy, deception and financial incentives, as a desperate attempt to buy user loyalty rather than a sustainable path to market share. The report argues that Microsoft possesses the technological capability to legitimately challenge Google, especially given its dominant desktop operating system. The narrative suggests that Google is facing user alienation due to issues like the promotion of AI overviews and content saturation with sponsored video, creating a demand for a cleaner, more reliable alternative. Experts contend that Bing should leverage its advanced technology and Copilot integration to position itself as the superior, user-friendly option, rather than relying on deceptive tactics. The conclusion emphasizes that building trust, rather than faking competitors, is essential for maintaining a billion-user base. Microsoft stock experienced a modest gain, rising by 0.68%, according to an analysis provided by The Motley Fool. This update reflects the latest investor communication from the company. The analysis, which offers a final verdict on Microsoft's performance, utilized afternoon stock prices recorded on May 8, 2026, and was published on May 10, 2026, providing investors with a snapshot of the market's reaction to the recent corporate news. Microsoft's stock experienced a dip following news that OpenAI and Microsoft have agreed to cap total revenue-sharing payments at $38 billion. This development comes after a recent contract renegotiation that aimed to increase flexibility for OpenAI to partner with other major cloud providers, including Amazon Web Services and Google Cloud. The agreement sets a defined financial boundary for the revenue-sharing arrangement between the two entities. While neither company has publicly confirmed the specifics, the cap provides clarity, which is viewed favorably by investors, particularly ahead of potential future events like an OpenAI public listing. Microsoft has invested $13 billion in OpenAI since 2019, a backing that has significantly fueled OpenAI's growth and driven expansion within Microsoft's Azure cloud business. Under the revised terms, Microsoft will maintain its position as OpenAI's primary cloud partner, with OpenAI products anticipated to launch first on Azure unless technical requirements prevent it. The license Microsoft holds for OpenAI's models and products is extended through 2032, but is no longer exclusive. The $38 billion ceiling on payments reduces financial uncertainty for OpenAI, allowing it greater flexibility to engage with competitors without conflict. For Microsoft, the $38 billion figure functions more as a cost ceiling than a revenue limit, establishing a clear boundary for its financial obligations over the deal's duration. Microsoft previously confirmed that revenue-sharing payments will continue through 2030 at the previously agreed percentage, subject to this cap. The demand for AI-related services on Azure remains strong irrespective of the exact structure of this arrangement. The potential upside for Microsoft investors is linked to OpenAI's future. Microsoft currently holds a 27% stake in OpenAI, and a successful IPO could significantly impact this position. Analysts at TipRanks currently rate MSFT stock as a strong buy, with an average price target of $559.98, suggesting potential upside of around 35.7% from current levels. Reuters noted that they could not independently verify the reporting from the information, and neither OpenAI nor Microsoft have responded to requests for comment.